6:32 a.m. Chicago time. Do hope you are doing well. So it's the weekend and time for another weekend futures market recap. We'll go through 15 of the largest futures markets and I show you what I am seeing on my charts. But before getting to the charts, just an apology if I sound a little bit odd. That is because I'm feeling very odd, very jet lagged at the moment. We arrived into Paris Charles de Gaulle airport this morning, spent the last 4 hours driving south. I don't know, just traveling from Australia is always tough. You spend about a day and a half on planes, and I always feel just really weird whenever I arrive, just because the time zone changes and the amount of time that you're out of sync with the world. Anyway, so it is Sunday afternoon here, about 3:30 in the afternoon. Flights and airports and everything going through customs seem to be back to normal. It's really good. I sped through most of the check-ins and all of those things, so that's good to see. That was going through Sydney Airport, Singapore Airport, and then Charles de Gaulle Airport. And it's nice to be back in France, back to good food, good coffee, nice people, and fast order routes. Anyway. So I'll probably do an update during this next week about observations from spending the last 10 weeks or 3 months in Australia, because people like hearing those general overviews. Getting back to the markets, we had a fascinating week. Finally, we got the break. And we always need a couple of data points to come out, like Fed and the employment numbers. A classic pattern. As soon as they speak, whatever they say, it sets off the market. I think the employment numbers were generally weak, but who knows? I don't really follow them. All I'm looking for is signals and patterns in the indices. So we're going to go through the Emini charts first, and then we'll look at the tick bar charts and the signals that have popped up this last week and things that might be going on for next week. And so last 2-3 weeks, I think I've been saying watch out, we got these rainbow patterns at these highs. So this is the traditional view of the better indicators, everything on the left hand side to do with volume, everything on the right hand side to do with price. And the volume indicators we're looking at better momentum below the price bars, and then with some signals on the price bars themselves, and then better pro-am, which is measuring the average trade size. You can see here reaching to these new highs, 4,600, we've got all these rainbow patterns. Rainbow stands for potential reversal of an amateur breakout or breakdown, and that's when the move is being led by the amateurs. The average trade size is low and we're moving into new highs, and particularly when we get a pattern like this, that's an exhaustion buy pattern here on better momentum with a rainbow. That signals that that is unstable. That means there's a rush to one side of the boat. It's all being led by the amateurs, and they can often be wrong-footed. And then I say always watch for the low of the amateur sequence for areas where they break down, because sometimes rainbow patterns lead to a little bit of weakness, but the market powers ahead. So I don't know if you could count the low of that sequence here, which would be 45.57, potentially as an area that when we broke that one, we tested back into that. That was pretty significant. We bounced off that and we've come down because we've made that new amateur pattern there that then discounts this old amateur low that we would have been looking at here at 45.21. And then last week I gave some levels. I think they were closer to 45.50s that were going to be key. As soon as those were broken, that led to weakness in the market. So there we go. We've been signaling it over the last couple of weeks and we got that weakness. But the background is in red, which means we've got a confirmed uptrend in both price and volume. So all we're seeing here is a little bit of profit taking, and what I'm going to be looking for is to see how deep this sell-off is and where the professionals step back in to catch it. We've got a couple of levels that on the daily chart we should be going down to see. The first one is when we get a cyclical cross on better sine wave on the daily chart, and that's using better sine wave here. The plate of spaghetti, I always call it, beneath the price bars, calculating cyclical activity in 3 different time frames. You can see here the thinnest little lines here. When they cross, that's when cyclically we're due for a little bit of support on the daily chart. If that one holds temporarily and then maybe gets busted, then we'd be looking for the next thickest lines here. That's the intermediate time frame for those to turn down, cross, and for the market to hold. So we've got a little bit of ways to go before those come down. We can go down through the time frames to look where the end of trends and the lower time frames are starting to show that we've got potential areas of support, but it's not in yet. So there we go. That's the daily chart, the weakness we've been looking for. Finally got the break this week after the Fed and the employment numbers, and we're going to be selling off until the professionals step in. What would be nice if we get a professional bar, some exhaustion pattern on the downside, and we've got a 6,000 read here as the exhaustion buy, and on the way down we're only at negative 1.8 million. So there's a big discrepancy between those buying levels and the sell-off level that we might have to see on bed momentum in order to trigger an exhaustion pattern to hold the market and blue professional bars to come in. So let's see if it's going to be a little shallow retrace or it's going to be something nasty. The 135-minute chart, same thing. We had Rambo patterns, we had amateur bars of those highs, we had flush patterns, one little end of trend. We should probably put in a pullback to end of trend on the intermediate time frame here on the 135-minute chart. And so that's these slightly thicker lines here coming together. So we've overshot this support on this lowest time frame. We might be caught by the next one here. But on this time frame, no blue professional bars, no exhaustion sell. So we don't have anything to catch us quite yet on the 135-minute chart. 45-minute chart here, first time we start to see some blue professional bars come in. No exhaustion sell yet, but we got some blue professional bars coming as the market weakens at the moment. That again has got a little bit of time to run. We'd expect the highest time frame here for these lines to come together before this thing holds. But potentially on this time frame we've got a pullback to end of trend forming, pullback to end of trend on the lowest time frame, and that if we come in with a cyclical support on the highest time frame with blue professional bars, the only thing we're missing is an exhaustion pattern on the 45-minute chart. So it's not there yet, but potentially that could be coming along. And then the 15-minute chart, here we've got some vertical solid yellow lines, and that just shows us the beginning and the ends of the week. So last week we had blue professional bars here, we sold off, and then we came back to test. Blue professional bars come in here, a little bit of stair step down 1, stair step down 2, and then we got the gap open where the market really cooled off. Here we've got exhaustion sell, bullish divergence. We've got some blue professional bars coming at the lows. Better Pro-Am though is ways away here. That's got to trigger down when this next bar closes. Hopefully that'll trigger down. No, it won't, because we're still referencing back this local high. So that's still a long way to go before this triggers down and comes in closer to where the price action actually is. So although that's looking a little better in terms of 2 of the 3 signals here, it's not timing wise. We've got some time to go on better Pro-Am. Oh, jet lag. Anyway, I'm going to power through. 13,500 tip bar chart. Here we go. This is where we see the day and night session. So on the 15-minute chart, we had the gap down. On the tick bar chart, we have continuous data day and night going through. So you can see here the way the market opened up. And it did have a gap down, but that was because the market was shut for the hour or so after the close, the end of the day. And then on the open, it was a nasty move down. I think that was when Trump was indicted. And then we rallied back up, almost closed the gap, and then continued down. Here, more interesting on the tip bar chart, there's all the blue professional bars taking profits at those highs. Let me just show you this, the way this played out. We had moving into those highs, we had Rambo patterns, then we had exhaustion. We test back in. We didn't have blue professional bars on these moves here, but we had some here and we had this. So the professionals game it back up to the area that they know they can take profits. They weren't smart enough to get out on this move at that point on that exhaustion, but when we retested into that area, bang, that's when they got in. So the professionals were short at that point, and then down here at these lows, poor old Rambo patterns and amateurs being wrong-footed. They are getting short right down here, and then of course the market moves against them. Eventually comes back down beneath that, but they've been taken out on stops during that move, with that nasty move back up to 45.60 up here. Then here we've got exhaustion sell, we've got blue professional bars. Pro-Am line has traded down, closed that gap a little bit more. And here we've got pullback to end of trend on the lowest time frame, intermediate time frame. We've got to come back up and put in a pullback to end of trend on the highest time frame, but I could see us getting a little bit of a bounce from this level here, coming back up to form that and then having a final push down. So generally E-mini is weak at the moment. We've still got to put those testing moves in. It might look like the low is in over the open on Sunday and Monday, and we could get a little bit of a relief rally, but wait for the 13,500 tip bar chart has still got to complete with putting in a pullback to end of trend on the highest time frame here where these lines come together, so we could rally back and then come back down to test this level down here. So there we go. That's the E-mini looking from the daily chart all the way down to the tip bar charts. And now we're going to go through the tip bar charts for each of the 15 markets and show you the signals that popped up. So first of all, let's go through the Forex charts. We've got the Euro, with this week's activity, no signals whatsoever. I think for the last 3 weeks we've seen nothing on the euro. We've got exhaustion buy, bearish divergence. Market continues to sell off at these lows down here. Yep, we've got some blue professional bars coming in, testing that 1096 level, but we did not have exhaustion sell. So we're not going to get a signal until we have a proper exhaustion sell pattern down there on the euro. So British pound, what's the pound been doing? Here, last week we had a short signal. The market rallied back up to that level where we had all those blue professional bars, continued to sell off here, and not a lot of blue professional bars down here at the lows. No exhaustion sell. It's oversold with a background in red, but hasn't generated any reversal signals there on the British pound, so nothing going on there. Aussie dollar. Now, I talked about this last week, whether you had these false signals here, just never came to anything, and then we had a whole bunch of blue professional bars come in at this point here at 68, bang, and sell it down. We had a little bit of a relief rally. Same thing happens again. You know, we had only 1 or 2 blue professional bars here, but as soon as we rally back to test, a whole bunch of blue professional bars come in there. And at these lows, yeah, looks like the euro pattern. We've had a couple of blue professional bars. We've rallied back a little bit, but we don't have exhaustion sell. There we have an exhaustion buy pattern, maybe getting that move going, but nothing on the exhaustion sell. So this week, no signals in the Aussie dollar. But Japanese yen, this is really important. So Japanese yen, 900 tip bar chart down here. Last week's we had that huge volatility. I was long into this move on Japanese yen, had a nice trade there. Then we had the news out of the central bank that caused all of this volatility going on here. As soon as we tested back into the highs of that blue ranging bar, professionals step in, bang, sell it down. We get a signal and the market sells off down here to 70 cents or thereabouts. Now, I think that's 140. The way the yen is created and charted is really confusing because sometimes you have 4 decimal places. It's signaled as a 0.0070 chart pattern down here. Sometimes people invert it and look at the US dollar versus the Japanese yen, and so it trades above 100 on that basis here. I quite like the TradeStation chart here where we get it normalized to these levels, 70, 71. That makes more sense to me. But 70 is a really important value for the Japanese yen. And I'm going to do a video Monday or Tuesday about this because we have significant support, cyclical supports, and end of trends pattern coming in on a whole bunch of the Japanese yen charts. And I'll be showing you charts from the 460 minute all the way up to the weekly chart to show you what is going on there. If you want to get a preview of that, go have a look at Emini-Watch on Twitter. And I just copied a chart that I was looking at the last couple of days on the Japanese yen, and I think it's going to be really important. But Japanese yen down here, we had a triple signal go off. We're oversold. Exhaustion sell, bullish divergence. Not a whole bunch of blue professional bars down here at the lows necessarily, but on this retrace here, they did come in. We held it at that point, and we got back above that. And it's bouncing off that super important level at 70 down here, almost exactly 70 that low. Fraction lower on the other bar there. So there we go, Japanese yen signal this week, and we can talk about that in another video, whether it's going to be a super important trade. So next chart to look at is the Emini 13,500 tip bar chart. There we go, beginning of the week, we got a nice signal. All those blue professional bars come in on that retrace back here after the open on Sunday, and the market sells off at 100 points, so that was super nice. And down here at these lows, we got some blue professional bars, we're oversold. We got a signal here and we came back in, put in another exhaustion sell pattern here. So it needs to get back above this range here above 45.50, really would be confirmation that that's in. But let's see if that generates another triple signal over the next couple of days on the E-mini there. So we might have a little bit of strength in the E-mini as we rally back up for another push down. So that was what was going on the E-mini this week. 10-year notes. There we had the sell-off at the beginning of the week here. A whole bunch of blue professional bars, exhaustion buy, overbought with the background in grey. Bang, we get a couple of triple signals there and the market kind of sells off. But it does not have exhaustion sell down here. So we've got exhaustion buy, blue professional bars there. Let's see if that tests, comes back down into this area and generates a long signal on the 10 years. So gold, first of all. Gold, this week we've had a signal at the end of the week. You can see all of those blue professional bars selling it down. We come back up into that zone, blue professional bars to blue professional bars here. come back up into test it, and then blue professional bars, stair-step trade, bang, down into those lows, and we're holding there. Let's see if we continue back up, get through 1990, and then we might have a crack at 2000. Silver, did silver trigger? No. Last week we had this short signal after exhaustion by bearish divergence, a whole bunch of blue professional bars, bang, come back down, but it is setting up for a potential trade there. We've got some blue professional bars. We need to get above 24 in order to trigger that. And then Bitcoin this week, again, super volatile down here, but that was a spike down at 28.5, and then we rallied back up. We caused a triple signal to go off, but then we've weakened from there, and there's no blue professional bars coming to hold it at that point, but that's pretty important there. So the 30,000 level is key, 30 to 31, getting back up through there, but at the moment it's not come in. When you look at the longer term charts on Bitcoin at the moment, we're sitting underneath cyclical resistance on the highest time frame on the daily chart. So yeah, that's why Bitcoin is going nowhere. Now, crude oil. Last week talked about crude oil that might keep on punching up through 80s to 82, 85. And we had a signal this week, midweek, really nice here. Again, not a whole bunch of blue professional bars at those lows, but as soon as we test at that point here, a stair step up, crude is still rallying there, and no exhaustion buy at that point. So the longer term charts for crude look pretty positive. So let's see if that cooks out. Now, natural gas and copper. So these are my two trades this week. I was short copper at the beginning of the week because of these patterns here. That was a super nice trade. Got out at 391 on this decline here. So exhaustion buy, bearish divergence, a whole bunch of blue professional bars here. Triple signal comes in and it sells off super hard. Now down here at these lows, although it's triggered a triple signal long, that's not a classic because we don't have any blue professional bars down here at those lows, and that's why we're retesting there. So that was copper this week, and my other trade was natural gas. Long natural gas here because of this signal. Whole bunch of blue professional bars coming at those lows. That was a classic down here. So we've got everything going on. Exhaustion sell, bullish divergence, all the blue professional bars, the trailing stop gets broken, and the background printed in red showing that it is oversold and the market rallied. Problem with my trade on natural gas is I took profits way too early. I took profits around this level here. Not sure about that volatility. That was not nice, but it's rallied up, and there's no blue professional bars so far taking profits at that point. So that's natural gas and copper. And then the ags. So we've got corn. What's going on there? No signals, nothing for 3 or 4 weeks there on corn. Potentially something going to happen this week on corn. Trigger long because we've got an exhaustion sell, bullish divergence. Blue professional bars coming in there. Soybeans. I got a signal long here, but we came back up. That's not great because we've traded down at that stair step at this point here, so that doesn't look like it's holding on soybeans. That was a nice signal short into that. I mean, that just looks like that copper chart I was showing you a second ago. Same thing, a whole bunch of blue professional bars with the exhaustion buy. Bearish divergence comes in just above it, and then bang, cracks, and we sell off super hard. And then lastly, wheat. What is wheat up to? Yeah, we've had a signal down here at the lows. So nothing the last couple of weeks until we get this. And only a few blue professional bars come in here. They've sold it down at that point. So similarly, not got a lot of conviction there on that wheat trade. So let's just see where that goes this week. So there we go. Emini potentially got a little bit of a rally going on until we sell it down again hard. On the 13,500 tip bar chart, highest time frame resistance comes in and they'll push it down again to freak everybody out, I expect, on the Emini. But we've got some interesting things happening on the Japanese yen, maybe on the 10-year, and crude are still carrying ahead. So there we go, some thoughts on the futures charts there, and I'm looking forward to this week's trade.